Hey everyone, welcome back to Fiscal Voyage. My name is Felix. In today's video, we're going to talk about a almost 4% dividend yield, dividend growth stock that's undervalued, is in the finance sector, banking stock, and undervalued, almost a 4% dividend growth, and it's been increasing, or 4% dividend yield, and it's been increasing dividends for quite some time. And the stock we're talking about is Bank OZK. And you can see here using fast graph, first of all, the bank is profitable. Earnings been growing over the past 20 years at 14%, average growth year over year. And obviously there's been some down year. For example, in 2012 had a 25% decrease in earnings from 2011, as well as in 2020 during COVID, it had a 32% earnings decrease compared to 2019. But one of the things that sticks out the most for me looking at this is that during these times, these down years in earnings, it continued to grow the dividend, as well as especially in the financial crisis in 08, 09. Look at that. It grew the dividend even though by just only 1 penny in 2008, and in 2009 1 penny. Earnings continued to grow in both years, and the dividend was maintained and growing. And also in 2020, during a year where a lot of companies were either suspending their dividends or cutting their dividends, there was a few that grew it, and Bank OZK was one of those companies that grew the dividends in 2020. You can see here in 2019 it had a 94 cents for the year in dividends, and in 2020 $1.08. So it grew it quite nicely in that year. Matter of fact, if we go here in performance, we can see that in 2020 it grew the dividend at almost 15%, and to me that's amazing. In a year where the world was going crazy, it grew the dividend very nicely, and that year it had a 47% payout ratio because of the earnings drop. But then now the payout ratio is around 25%, which is great. It means that the company can continue to grow its dividends. You can see at this rate here, double-digit rate, over 15%. Some years 44%, 35% here. So and you can see that here in the earnings, there's plenty of space here. You can see here in 2024 is about a 25% payout ratio, and in 2025 27% payout ratio. And you can see based on the long-term period, the company looks undervalued. And you see over here from 2012 all the way to 2018 to around February, March, April, May, around there is all overvalued, around a PE around 15 to 20. And you can see right now we're getting a PE of almost 7. So normally when I see kind of like this big swing of different PE ratios, I like to shorten the time frame much closer. And you can see here around a 10-year, the PE normal average is around 11, right? Where the quote-unquote fair value is around 15. So even if it's just the company were to go back to a PE around 11, you have a great earnings potential, return potential here at 29%, almost 30% in annual rate of return for the next few years. And if it just stays here, flat around the $30, $40 area, you're getting almost a 4% dividend yield, 3.9% dividend yield here on Bank OZK. So that's very nice. And then, that's all great and dandy on the adjusted operating earnings. How about operating cash flow? Can the company cover this dividend? And you can see here the company does cover the dividend. They don't have expectations for operating cash flow for 2024, but you can see here in the past it has covered the dividend very nicely, and the free cash flow is the same way. They don't have expectations here, but it's been covering the dividend very nicely these past few years. So that's why I like this company. I actually own shares of this company at a lower rate, but I'm looking at maybe buying some more shares because it is in a good technical spot, and I'll show you that shortly. First off, let's go to some other analysts over here on my Schwab account. Morningstar doesn't have a rating here, but CFRA gives it a buy rating for Bank OZK. Let's make this bigger here, and you can see here it does give it a buy rating. Not a strong buy, but a buy rating. The valuation is positive, and I agree. The valuation is great on the company. The growth is good on the company. Some other things here you can see here, compared to the peer, the company's been growing much better compared to the peer. The year-over-year compound annual growth rate on revenue is 12%, where the peer average is negative 0.7%. So you can see here, so it's performing much better than the peer. And you can see, and here's the funny part here: the current PE is at 6.7 compared to the peer average at 13.4. So what that tells you, it's performing better, but it's valued lower compared to the peers. So that's something I like, right? You want to find undervalued companies. And operating earnings per share here, compound annual growth rate here, you can see here, much better than the peers as well. These are negative earnings growth rate compared to the Banco ZK. So those are other things that I like fundamentally. Back to the fast graph, and you can see here forecasting long-term growth. They're expecting around 6% growth. Just one analyst are expecting that. So that's good there. And normal multiple, I like to use the lowest normal multiple here. So let's see if we can find the lowest here, which is 8. And you can see here, if it to revert back to an 8 multiple, 8.66 multiple, we're getting still almost a 70% annual rate of return for the next few years. That's still great in such a low multiple. What happened if the stock go back to around a 15 multiple like we saw in the earlier years? Look at that, 46% annual growth rate. So you can almost 50% return in a few years. So that's annually. So in 2-3 years, you get your full 100% return. It become a home run trade. So that's one thing I like about this company. And now we go to the technical side of the stock of Banco ZK. So we're gonna look at the monthly chart here. I like to, for long-term positions, I like to look at a 3-month and the monthly, and maybe the weekly for a buying opportunity. But you can see here on the monthly, the stock is respecting this 50 moving average, the 50 and 55 moving average. This is what these two lines are. It's respecting it very nicely here. You can see some bottoming tail here. It went lower, but it bought back up. This is in 2023 over here as well, and here. And that's why I kind of like at this position here. Now we do have very strong sellers in this range from $56 to $50. Very strong sellers. So that's what that's basically, if it gets over this $57, get to $60, this thing could go higher, much higher. As we can see here, it should, based on a 10-year average, should be around a $70 fair valued. You see $70 is at 11.20 PE ratio. So it should be around a $70 stock to be fair value, but it has to go through this mess, this strong resistance level. But it is trying. You can see here the moving average is curling up, so it looks like it's getting ready for a run. I don't know when that's going to happen, but it looks like it's getting ready for a run higher. And another great level for purchase is also this $30 range if it gets to that area, because that $30 range, you got the 200 moving average on the monthly, and you got strong support right here. So if we draw this kind of right around here, you can see we have strong support. Let's bring this back like that. You can see here there was resistance here. It broke, came back, test the resistance, and now it becomes support, run higher, becomes support, run higher. And over here, 2018, something happened here, but then it turned into resistance. You can see how it turned into resistance. But then, after COVID, took over that resistance, and then now it becomes support. So, obviously, if I could get around this $30 area, it'll be great. But I'm willing to buy a few more shares in my position at this current price because of the current valuation, right? I don't want to wait here, or I could just sell some naked puts. That's a possibility here, and collect premium. But I do want to own more shares of this company, and I think purchasing maybe another $2,000, $3,000 worth of shares at current price will be a good thing. And if we go get out of here and look at the 3-month chart, you can see here, the 50 moving average is kind of where it is right now, this $35, $36 area. So it kind of was there. But again, we have strong resistance here around this $50 area. So, but once it breaks that, and it looks like for me it's gonna break it because it should be worth a $70 stock. So I think right now it's just consolidating and then getting ready for a breakout because we look at forecasting. They expected the company to still grow earnings. It's undervalued. A nice high dividend yield, a growing dividend yield with plenty of room to continue growth. You can see here double-digit growth the past 6-7 years. So overall, everything I like about this company, and you can see here shares is a regional bank, United States, and long-term debt to cap only 14%, which is good. So overall, I like this company a lot. I own shares. I plan on buying more shares after this performance review I just done, and I like it a lot. So tell me what you guys think in the comments below. If you're interested in buying shares of this company or already own shares, or what other financial stock looks appealing to you. And if you're new to the channel, make sure to hit that subscribe button and like the video as well. And I'll see you guys on the next one.